Hi dear traders! Throughout the week, markets were mainly speculating about the hawkish stance of the US Federal Reserve. Yet by the close of the session on Friday, traders got positive news about the state of the American economy. It turned out that consumer sentiment, representing the key sector of the US economy, has finally improved. The Consumer Sentiment Index issued by the University of Michigan rose to a 13-month high in early February. The US stock market also managed to win back previous losses. Find out what was the sentiment in the forex and commodities markets in our video review. The US dollar index, which demonstrates its value against the basket of 6 major currencies, settled at the level of 103. Investors are looking ahead to the US inflation data that is due tomorrow. In the meantime, the market was evaluating the comments by the FOMC members, which were hawkish for the most part. The monetary authorities insist on further rate hikes due to the overheated labor market. As for the euro, it was mainly correcting against the US dollar after reaching a 9-month high. The euro-dollar pair lost 1% to fall below 1.0680, even though the European Central Bank continues to display its hawkish rhetoric. The regulator raised the rate by 50 basis points at its February meeting and confirmed it was ready to maintain the same pace at the meetings to come. It seems, though, that the tightening of the monetary policy in the Eurozone has little effect on inflation. The same is true for the UK, where the fight against high consumer prices has not been so successful. Instead, inflation is rising at a double-digit growth rate despite the measures taken by the regulator. In February, it was the 10th straight rate increase by the Bank of England, which brought it to the highest level since 2008. Last week, the UK Office for National Statistics encouraged investors with positive data, revealing that the UK economy managed to avoid a recession in the fourth quarter of 2022. However, this news had a short-lived effect on the market sentiment as the pound-dollar pair returned to the previous level of 1.2050. The trajectory of the dollar-yen pair remained almost unchanged last week. The quote is hovering near the level of 131.5 yen per dollar. In recent days, demand for the Japanese currency has been shaped by speculation on who is going to be the next governor of the Bank of Japan. It was finally announced that Katsuo Ueda will replace Haruhiko Kuroda when his term ends in April. Markets expect the new governor to have a more hawkish stance on the monetary policy, although Mr. Ueda supports the existing approach. In the commodities market, gold saw the second week of loss in a row. The yellow metal declined to $1,860 per troy ounce due to a stronger greenback. The American currency gained ground amid expectations that the Federal Reserve would introduce more rate hikes. This week, the gold dynamic will depend on the inflation data in the US. Apparently, oil traders were the only ones to post gains last week. At the end of the weekly session, BRENT crude added more than 8% to trade at $87 per barrel. The main driver was the news about Russia planning to cut its output by 500,000 barrels per day in March, which may limit their global energy supply. In addition, Saudi Arabia, the world's largest oil exporter, has raised crude prices for Asian buyers for the first time in 6 months, amid expectations of oil demand recovery, especially in China. So the outlook for oil remains bullish. These are the trends of the last trading week, and now a new week has begun and new events are ahead. Don't miss our daily news reports to be always in touch with the latest events. Subscribe to our channel, stay in touch, and see you.